Hey, Hyliion traders, Nick here. Another look at it. Last time I think I did an official video for it. I think I've included a couple times in other videos, but the last time was September 10th, 9th, 10th. And I had something positive to say. Well, I still said be careful, the debacle is ongoing and pops should be used to get out. But I did have some positive. And at the time, there was a box in which I drew during the video, actually, this little box. I said, that's your playground. And I said, break out from the top, you will carry in that direction. And then I laid out the process how to get out from this unbelievable downturn. Or if you lose, the first setback would be 8.5. Don't lose it. They did, temporarily. Then they tried to get out of the top of the box, and they failed. So we nailed the range. So it's not like we don't know our levels. They're just not willing to take that extra step. And if you remember, if you've been watching these videos for a long time, if you haven't, if this is your first time here, subscribe to the channel. It's free for now. I will lock it up eventually, but for now it's free. And your support is just by subscribing. I've been calling, be careful as soon as it lost 18. Because I was long and then I saw technically it was breaking down, and then the behavior continued. Every ledge they try to hold to make a bottom, they lose and they create a lower low. So this tells you that from a price action perspective, forget the company itself, no judgment on the company. Regardless of how great the company is, if Wall Street doesn't like it, they don't like it. So you can't convince them the value of the company, regardless of what you think of it. So let's just talk about what's going on with the chart. Maybe you can get smarter than them. So the pops are opportunities to get out so far, because the machine looks back and sees that the lower high trend and the lower low is working. Therefore, they don't change the mode they're trading. They have code for descending trend. I'm an engineer, I'm not a coder, but I have coded before enough to know how logic goes in code. So if I have a decision-making process working, I repeat until it fails. And the code in the descending channel would require them to sell the pops at certain levels. And those levels are calculated based on math looking back on the chart. So if you don't believe in the chart, you're causing yourself to have a blind spot on purpose, because that's what machines are doing and they control most of the action. So let's talk about it, how it's going on. They tried to set a floor here and then they gave it away. They ran into it, they couldn't overcome it. So then it becomes another leg lower. Machine knows, okay, it worked again, let's go. They come back to hold the floor, they fail, they create, rinse and repeat. You can look back and you see this happening every step of the way. Occasionally, they have a big headline and a stent rally. Now, what didn't serve Hyliion well is the fact that the market itself had a debacle in September. It started early September, and I noted in the video that, hey, Wall Street is having a tizzy. They will buy the dip eventually and make new highs before we correct 20%. And we did. We just today made new highs. What is today? 25th, October. So I was right about buying the dip. So the machines are still buying the markets, and this one cannot find the floor. So you have to ask yourself, what if eventually the market says, you know what, let's take a break and correct 20%. This stock will be demolished. So keep your enthusiasm level in check. That was what I would do. And I said I would not add to my risk. So averaging down is a horrible idea in general. Averaging down in a stock that doesn't have an income statement yet, so to speak, is an incredibly horrible idea, in my opinion. If I average down at a company that makes $50 billion in cash every quarter, fine. I can understand it. Okay, over time, if the stock market is higher, then it will be higher too. So I get that. But averaging down in an iffy proposition, and when I say iffy proposition, as a stock, not as a company. I love the company concept. I like what they're doing with the hybrid model type of a deal, changing one axle from regular propulsion to be electrified. All of this is cool. The truck's cool. Looks like they're making headway. But doesn't matter. Proof is in the pudding. The stock market doesn't like it. So here I am telling you that pops into 8 and 850 are tough spots now, because that was the level that was supposed to hold and they're losing it. Also, in my prior video, notice my orange line is gone. If you remember, or if you watch back, I had a dashed orange line, which is an alert. Get the fudge out. The alert literally said that, and I said that in the last video. I said, if you lose 8, get out, because you're going for a ride. You got a break that it only fell 15% from there. The target is much lower, technically. So it's not out of the woods. What did it just do? It came back to retest the neckline that it just lost. 8. That was my trigger. Alert, orange line. It's gone, because now onus is on the bulls to recover that line. So today, 2025, the markets are going ballistic. It was an up day. Facebook reporting after hours. Oh, Tesla was up 12% today. What did this one do? Up 2%. Not too shabby, but nowhere near the enthusiasm that the other electric stuff went up. So Lucid, I think, went up 2 or 4%, something like that. So those two are in the same bucket. They don't have a P&L right now. They have great companies. They have great cars. They have great people. Just Wall Street, the entire stock price is in hope. And this one has been around longer, so it's been maybe faded, and Lucid is stealing bids from it, kind of a deal. So if it doesn't recover 8-ish, 8.5 of course, because that was the box. If it doesn't get back into the box, oof, I would not get long it until the machines tell me, okay, we've changed our mind. So how can that happen? So let's talk about the positive stuff and be positive about it. It has room to get up, but it has a lot of scar tissue to get through. Every level it lost that it fought for will become a problem to overcome. 8, 8.5, those are two problems. 8.88, that orange line, I did not draw. If you look left, that's the tallest tower, right? These bars. That means that is the most volume in the whole year. So you see volume bars down here. They don't mean much. They just tell me when things happened. How could I use that? These volume bars here on the left side, they're the same information laid out as to what level they happened at. So this tells me that when it hits 9, 8.9, they're going to be trading it like crazy, which is congestion. Right now, if it's rising, there's an imbalance of like more avid buyers than sellers. They hit here, they both are active equally, they slow down. So the good news is, if they can by some miracle get to 950, there is the opportunity. Look at those two massive fails. One fail here, big ledge here. If they can by miracle take out 9.6, 9.7, you can breathe, because they can overshoot to 11. Now there's a lot of ifs. So what needs to happen? Take back 8. Then a mini level at 8.5. Then the huge battle at 9.5. Those 2, 3, 4 candles, 9.6. To then have some open space, not immediate failures. Mind you, 10.4 is going to be a problem, but at least it's a few months back. So, tough price action for the longs, for the bulls. I'm rooting for it because it's just painful to watch how it's drip, 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 drip. And I share your, I welcome your input, but I need, if it was my brother into a stock like this, I would beg, stop adding to your shares, because we don't know where it's going. Because it is a speculative, it's okay to speculate, and speculate is not an insult. It's a fact description of the opportunity. They don't have anything right now much based on the enthusiasm. It's all based on future stuff to come, the nice Hypertruck and whatever else comes after that. So it's future successes. Therefore, it's not vaporware, but it's not here yet. So it's not tangible. And great businesses fail on Wall Street. They have before. It doesn't mean if they have a beautiful product and a beautiful company and great people and a super leader that everybody that comments loves the leader. Forget his name now. But that speaks well to the company. But look at this. That's decimation from the investment community. So I have to respect that. Now, this is 3 weeks of progress. That's something to build on. But technically, I mean, the sellers are there. Everything I'm looking at this chart from I literally watch thousands of charts every week because I have a chat room with thousands of people in it. So I get thousands of requests hundreds a day, thousands a week, no doubt. On Sunday alone, I reviewed 105 charts in 2 hours live on YouTube. So I promise you, I know how the charts work. I'm not a technician, and I definitely am not from freaking Wall Street, that's for sure. So don't be saying, oh, Wall Street paying you, whatever. No, I don't have any affiliation with Wall Street. I'm an engineer who figured the shit out on his own. So trust me when I tell you, onus is on the bulls to take this over. Otherwise, the bears have it. The trend, you can see it. Every pop is getting sold. Every line is getting lost by the bulls, and then it becomes a wall above them. So be realistic with the expectations. That's the best way I can put it. Definitely not an insult to the company. I'm telling you, I'm a technical guy. I like cars. My son builds cars for a living. He's a fabricator. He builds trophy truck like things. So if you don't know what that is, it's just big long travel. What do you call them? Pre-runners. So I'm on the side of this company. Let's get it done.